this video, we're going to begin to look at calculating profit. Profit is a word that many students already know before they even start to study business. But let's just make sure we understand the meaning of profit. So, pretty much every business wants to make a profit, but we will explore exactly what it is and how it is calculated. In simple terms, profit is the difference between the amount you sell something for and the cost to you of selling it. It's basically the amount of money that you have left after the transaction. If the money coming into the business from sales is higher than the money going out of the business in costs, then the business will make a profit. It will have more money than it started with. However, if costs are higher than sales, the business will make a loss, meaning they have spent more than they have made. To all the teachers out there, show all of these videos without any ads and gain access to our growing library of over 500 teaching worksheets. Why not visit BizzWizard.co.uk to find out more? If sales and costs are actually equal, then the business will make zero profit. And this is an important concept known as break even. The business has not made any money, but they have also not lost any money. So you need to remember the following calculation. Profit, or loss, is equal to sales minus total costs. Profit is usually measured over a certain period of time, such as a month or a year, and it should be regularly reviewed to establish the success of the business. There are also many different types of profit, which we will discuss in more detail. Let's start by looking at the different parts of the profit formula, starting with sales. Sales can also be referred to as revenue or turnover. For a business like Costa Coffee, their sales will come from selling their products, cups of coffee and other drinks, cakes and biscuits, sandwiches and other snacks. For a service business, such as a hairdresser, their sales will come from haircuts, styling and colouring, from selling their services to the customers. So next, let's think about costs. You have costs in your personal life, as do I, and a business will likely have many costs to consider. Let's go back to the example of Costa Coffee. They have to pay for the coffee, milk, sugar, and other ingredients for the drinks and the food that they sell, as well as disposable cups and bags for people to take their purchases away. They also need to pay their staff wages and provide them with uniforms. They also have other costs relating to the physical premises that they run, and these include renting the building where the coffee shop is based, along with other property costs such as business rates, insurance, and electricity. And as a business that sells food and drink, it's incredibly important that they have high standards of hygiene. So they will need to pay the costs of cleaners, along with the cleaning materials they use. And of course, Costa will have to pay for the running costs of their tills, their phone systems, and their other IT costs, including broadband charges, among other things. And it's really important that we understand that these costs can either be fixed or variable. You might be thinking, well, what does this even mean? And we'll look at both. So fixed costs don't change when sales or output change. These are things that you have to pay even if you haven't sold anything, like rent, broadband, and insurance. And if you happen to be selling loads and loads, then these costs won't change in line with output. And then there are variable costs that can go up or down depending on sales or output. So with Costa, they will use more coffee and other ingredients if they sell more drinks and more food. They will also need to use more disposable cups and bags. So these things are all variable costs. The more that they sell, the more that they need of these resources. It's important to know that staff costs can be a combination of fixed costs. Paying people for their normal hours of work won't change in line with sales or output, and they will often have a contracted set of hours that they work, and this will be a fixed cost that won't change. If you think about it, they still need staff in Costa even if nobody goes in. But if Costa asks some of their staff to work overtime, to work more hours than their fixed contract, maybe because it's particularly busy, then this part of the staff costs is variable, as it changes depending on the number of sales. At Christmas, they may sell so many hot chocolates that they need to ask staff to take on more hours or even employ some temporary staff. So these costs change depending on how much is sold. They vary, hence being variable. It should be really clear in a GCSE exam question whether the staff costs are intended to be fixed or variable, so try not to overcomplicate things. Now, we've seen that profit is equal to sales minus total costs, but we can break profit down further into gross profit, net profit, and on some GCSE exam boards, you may even also need to know about operating profit. We will look at gross and net profit in more detail throughout this video, but if your exam board expects you to understand operating profit, you will need to take a look at some other videos. So firstly, we have gross profit. This is the amount that the business has left, the profit made from buying and selling goods or services after taking away what we call the cost of sales. Cost of sales are costs that relate directly to the product or the service that the business sells, but not other costs, also known as expenses or expenditure, of running the business, like rent, telephone, and internet. So for a business like Costa, its cost of sales will include the cost of the coffee, the milk, the sugar, and the foods that they sell, along with the cup and the bag. So remember the following formula. Gross profit is equal to sales minus cost of sales. So then what about net profit? Well, in my humble opinion, this is the most important one. Net profit is the money left over at the end of it all, the money left in your pocket, or in most cases left in the bank. There are two different ways to calculate net profit, but both get us back to the same place. Firstly, you could think of the formula net profit equals gross profit minus the costs of running the business, or the expenditure. But we can also think of it as net profit is equal to revenue minus total costs. So for a business like Costa Coffee, they will have running costs such as rent, electricity, staff wages, cleaning, and these all need to be taken into account. If the running costs of the business are more than its gross profit, then the business will actually be making a loss, meaning making no profit and actually losing money. We will examine each of these different types of profit in much more detail in our next few videos. Bring this video and over 100 more to life with fun, interactive games, quizzes and case studies. Why not try the first 25 completely free by visiting BizzWizard.co.uk. Now, let's introduce Jimmy Jones. I would imagine right now you are thinking, why on earth is there a pirate in this video about calculating profit? And this is a fair thing to wonder. But Jimmy is the lead actor, or we might say lead pirate, working for a popular business called A Pirate's Feast, the dine-in experience. The business is based in London and is aimed at the tourist market, offering a unique pirate-themed theatrical meal in London. Guests are invited to watch an amazing show full of swashbuckling and walking the plank, whilst enjoying a piratey meal. It's in a reconstructed pirate ship moored on the River Thames, and the experience has won a number of awards and really is an event to behold. So let's start looking at the gross profit made by the Pirate's Feast. Remember, gross profit is equal to revenue minus cost of sales. So the first thing we need to understand in detail is the sales, or as we often refer to it, the revenue. So firstly, what does A Pirate's Feast actually sell? Well, they sell tickets to their dine-in experience. They offer two different types of ticket. The first type of ticket is the Pirate's Plunder, which includes a piratey meal and soft drinks and access to the show, and this costs £50. They then sell a Captain's Treasure ticket, which is a VIP, a very important pirate experience, which also includes a seat at the captain's table, a Captain's Treasure goodie bag, and a bottle of champagne between the two people for £100 each. So the sales, or revenue, will be calculated as the number of tickets sold multiplied by the price per ticket. In a particular year, they sold 35,000 tickets in total, broken into two different ticket types. Firstly, they sell 30,000 Pirates Plunder tickets at £50 each. So to calculate the revenue here, we need to multiply the number of tickets, which in this case is 30,000, by the selling price, in this case £50. So 30,000 multiplied by £50 generates £1.5 million worth of revenue. We then need to do this for the Captain's Treasure tickets, which they sell 5,000 of in this year at £100 each. So to calculate the revenue from these tickets, we would multiply 5,000 by £100 to get £500,000 of revenue. So, to put this together, they have £1.5 million plus £500,000, which gives them a total revenue of £2 million. Each of the video courses over at BizzWizard.co.uk also includes an interactive business case study that applies the knowledge learnt to a real-world scenario. There are over 1,000 multiple-choice questions, each with detailed feedback, which tests students' understanding of the content. Why not visit BizzWizard.co.uk to find out more? Now that we have the revenue, we need to think about the cost of sales. So it costs the Pirate Feast a different amount per customer according to the type of experience that they have chosen, depending on which ticket they actually bought. So the direct cost to the business of the Pirates Plunder experience is £30 per customer, and this includes things like the meal they eat and the soft drink that they are given. When you think about it, this means that they make a £20 gross profit on each ticket sold. £50 minus £30 leaves us with £20 gross profit. Now, the direct cost of the Captain's Treasure experience is higher, and it is actually £60 per customer. And that means that they make £40 gross profit on each of these tickets that's sold. Now the direct costs, the costs of sales, for this year then are 30,000 Pirate Plunder tickets at a cost to the business of £30 each, which comes to £900,000. And 5,000 Captain's Treasure tickets at a cost to the business of £60 each, which makes £300,000. So they have a total cost of sales of £1,200,000. So we need to think back to the revenue. How much sales revenue did they receive? If you remember, they had revenue from the two types of tickets, and putting this together, £1.5 million and £500,000, this gave them a total revenue of £2 million. So now we can work out the gross profit. Remember, gross profit equals sales minus the cost of sales. So in this example, gross profit is equal to £2 million minus the £1.2 million cost of sales, and that leaves them with £800,000. So their profit is £800,000, which is not too shabby. But there is something that we're not taking into account. We thought a lot about the cost of sales, but what about all the other costs involved in running the event? So the net profit also takes into account all of these other costs of running the business. So you need to remember that net profit is equal to the gross profit minus all other expenses, all other overheads. So, for the Pirates Feast, the indirect costs for 1 year are £10,000 in electricity, £18,000 cleaning costs, £2,000 maintenance costs, £10,000 mooring costs to keep the ship on the Thames, 10 grand in marketing, £100,000 for the salaries of Jimmy and his colleagues, and so the total indirect costs, the total expenses, is £150,000. So to calculate the net profit for a pirate's feast, we need to do the gross profit, £800,000, minus the indirect costs for the experience, the overheads, the expenses, which we know are £150,000. And this equals a net profit of £650,000. Here's the income statement for the Pirate's Feast, summarising the calculations that we've just done. We will look at income statements in much more detail in the future. So, you can see that the sales revenue is £2 million. The costs of sales, as we calculated, is £1.2 million, and that left them with a gross profit of £800,000. Now, the indirect costs, the expenses, we worked out were £150,000. So, the net profit, the gross profit minus expenses, the money that they're actually left with in the bank at the end of the day is £650,000. So now that we have looked at calculating profit, let's think about the impact on a business of making a profit or making a loss. So if a business makes decent profits, it has several options of how it can use this money. It can invest in new equipment. It can develop new products or services, look at taking over another business, pay out dividends to the shareholders, or even keep some as retained profits to use in future years. On the flip side of that coin, if a business makes a loss, it may have to do the following. It may have to delay investing in new equipment, might have to delay developing new products or services, might have to reduce or even cancel the dividends it pays out to shareholders, and it may end up being taken over by a competing business. Always remember, many new businesses do not start off by making a profit. Their costs might be high at the start, and their sales might be low, because their business might not be very well known when it first starts trading. To succeed in the long term, a business needs to make a profit. This profit can be used to replace equipment that the business needs, to support growth, and to provide earnings to its owners and to its shareholders. Keeping some of the profit from the good years as cash in the bank can be a good survival tactic for any bad years in the future. Sometimes businesses have a bad year, and major events such as the coronavirus or Brexit can have a big impact on a business's profit. As Jimmy and the team move forward, it will be really important for them to keep a close eye on both their gross and their net profit. And in future videos we will look at many other examples, practice these calculations, and think about how a business can analyse this further by considering their profitability ratios, what we call the margins. But until then, this has been the BizzWizard,